for the wealthy, successful, money-making traders. This is your trader's friend. Thank you for joining me for another video. Guys, I'm so glad you can be here with me. Before you have the USD JPY on the 1 minute time frame. And you can see I'm going bearish in a bullish market, and I'm going to tell you why. So I've been in this pair. This is probably about the 8th trade this morning. And I'm going to tell you why it is I'm now shorting this market. I've shorted it probably about 5 times. I've had 2 stop out this morning that were not profitable. And you can see that it's probably about time for me to go long again. But we're going to see how this market is going to close. So this is currently my stop out. If price then comes back and closes above that, then you know that we are out of this market. But the reason that I'm now short in this market, the most I've gotten so far has been about 15 pips. I had 2 positions on this pair. I rode one of them to the top of this candle and got off. The second one, because I was looking for about 10 pips or more for each one of the positions that I had. This one yielded about 15 pips, and I thought, if it yielded 15, it's definitely going to do 20. So I put in a take profit for the other one for 20 pips with a stop about 2 pips above my entry point. And I was like, surely it's not going to stop me out 2 pips above my entry point. But it came back and it stopped me out. So usually you don't have that kind of pullback. That was the first thing. So I then went long again here, but I would just escape with just 1 pip before the market started turning around on me. So I noted this flagship reversal, not just one, but we got 2, and then we were followed by the confirmation. So I went short on this flagship reversal since it was pulling back to that just 1 pip. Now, we are right here at the 200 SMA, and there is a possibility that this market is going long. But this is why I shorted this market. Currently, we have a lower high. It remains to be seen whether or not we're going to make a lower low. And it may be that we will not. But I want to remind you that you can absolutely do this. You can be successful at Forex. Have an amazing pip-filled trading day. I'm back, money makers, with an end of the day video. So I wanted to show you the difference between scalping opportunities in the market and a legitimate reversal on the 1 minute time frame. So let's start where we actually were in the video today, because you know I was making these lower highs, did not get the lower lows, but this is what I want you to note. Now you've noted the size of the candles and the scalping opportunities in this. Lots of scalping opportunities. But look how quickly price then comes back. So you are getting lower highs. And even in this, you are getting a lower low. But look how close together these swings are. So these are the things you want to pay attention to when you are in a market. If you decide to counter trend trade, look at the closeness of the swings in that pair. So those were the scalping opportunities. Let me show you where the real opportunity came in, and I marked it on my chart. So this is a legitimate reversal in the market, and it may be a pullback, but for the 1 minute time frame, it's actually a legitimate reversal. So here you have this huge candle run up, and I'll blow it up later and show it to you so you can see the time and the distance from this swing to the next lower high. So you have this huge run up in this candle, and you can see how quickly price fell from that level. Now I actually marked this this trend line here, and I marked the trend line there because this is the same level again. But look at the strength of that fall and how quickly price falls before it's supported on that 200 SMA. You come back. So this is where I drew the trend line from point A to point B. You come back to that level, you fall down again, you come back and retest it again. So you can see where price actually breaks my trend line. It closes above the trend line, but pretty soon thereafter, it falls back down. And not only does it fall back down, it runs to the downside. So the difference again between the fake outs and the legitimate reversal was the time. And guys, it takes time for a legitimate reversal to form in the market. Let's go ahead and blow up that price action and take a look at it. So all blown up now, you can see the difference between the fake reversals and the amount of candles that are in between the swing. And there are times in the market that you're going to have that rare exception where the market reverses immediately. But most of the times it won't do that, especially on the 1 minute time frame. Again, this is that lower high and the lower low before price then turns around and goes very strongly back in the direction of the trend. Now we're coming to, and you can see how strongly it went. So here is that large candle I was showing you earlier. Look at how large it is compared to all of the candles you can see to the left of it. And then pretty soon that strength is closed out. And you can see the strength of that fall. But look at the time in between before you get the next lower high, that swing. Look at all of that time in the market. That's more than an hour worth of price action. And sometimes it's like 90 minutes, 2 hours. But in this case, this happened afternoon, my time today, Central Time, before you got that legitimate fall to the downside. So you can see price came up again to this level. That's where my trend line was. It came to retest it. That's the retest I was showing you. This was the high. And it looks like it's falling down. And maybe it's just different because I've blown it up. So this was the high of that candle. We came back to retest that high before price fell down violently to the downside. I want to remind you that you can absolutely do this. You can be successful at Forex. Have an amazing pip-filled trading day.